Hi, this is Chris from thetraderguy.com again, taking a look at the quote-unquote chart of the day. And for those of you who haven't seen the first couple ones, this is just simply me looking at a chart somewhat on the fly. I try to find something at least somewhat interesting before I make a video about it, of course, but I wanted to just kind of start making videos on my impressions, things that you can do to make your life easier trading, hopefully ways to notice that certain things occur over and over in the Forex world, as well as just quite frankly being able to look at a chart and get the required information relatively quick because especially if you're like me and you trade a lot of different markets, efficiency is very important. Otherwise, you're sitting here staring at charts for an hour or two every night, and that's not why we do this. So, getting your sea legs, so to speak, or even getting a little heads up is a huge advantage. The chart in front of you, for those of you keeping score, and as well, I should mention this is in HD as well, so go ahead and watch this in full screen. But the chart in front of you is the pound Aussie, and looking at this chart, it's a good example of, to me at least, why a lot of people think Forex is random. A lot of people think just markets in general are random, and I don't think that's true at all. And I want to show you a trick that I do almost every chart that I uh, put up, and then I'll put these lines up, and then I'll just leave them there. But anyways, horizontal line, just put it on the chart, and I start plotting obvious areas that would probably catch somebody's attention. 1.50, 1.5 is a place that you might expect it would catch attention just because it's a nice, huge round number. And 155. I tend to plot every 500 pips or so. I found that seems to be of interest to a lot of traders. Um, Furthermore, depending on the pair, sometimes I'll split that and I'll do 250 pips. So, for example, um, we'll see how this turns out, but you can already start to see that something's going on here. Okay, so I have a grid of lines laid down. Now, if you look at it, all of a sudden, the Forex market doesn't seem quite so random, does it? You can see that there has been reactions here at 155, and you would expect that. It's a nice large number. 157.50 is an area that we've seen some reactions in, and as well as 160. Although we did break above it, you can see that it acted as resistance on the way back in and acted as support there. I mean, you have to keep in mind that there is no pip for pip type of support and resistance. It just doesn't happen that way very often. This is why it's very important to wait for the daily close, at least in my opinion, a lot of times, to see on which side of the line you end up on. Here at 152.50, you can certainly see there's been reactions over and over again. Excellent support and resistance examples in this chart, really. I mean, you can see 150, obviously, like you would expect. So, we obviously have some things going on. Now, let's look at the chart as it stands. So, we've laid out a nice grid, and it seems pretty straightforward. So now we look at this and we can see that the candle from the previous session on Friday, um, and let me check the calendar. Yeah, it was August 24th, um, formed a shooting star, which of course is a bearish signal. You can see that the area here has a lot of noise in it, recent noise at 152.50. And of course, you have this and this and this and this. So we have precedent for this to work out. Also, obviously, we're in a downtrend. I don't think there's really much arguing that. So it would make sense that we might continue lower. Okay. So looking at this, that's an interesting, that's another thing to think, okay, well, this area matters and we're in a downtrend. So preferably we want to be going short. So for me personally, and this will change depending on the pair, a little bit, and also it's a little bit of a personal decision. But I like to see a break of the lows by about 10 or 20 pips. In this particular case, pound Aussie is a little less liquid, spread's a little higher, so I would give it closer to 20 pips breakdown, and then I would be willing to short it personally. In a pair like euro dollar, maybe 10 because the spread's so tight. And the reason is you want to make sure that all of the stops are broken down on the downside before you start selling. So the next thing that you might want to do is you might want to take a Fibonacci tool, retracement tool, and as you pull it up, you'll notice that we are right at 38.2% retracement level. So that's another reason to think that, hey, maybe there's something to this. Go ahead and get rid of the Fibonacci, and let's go ahead and see something about maybe a moving average. Let's see, where's the 200? There's the 200. Where's the 100? There's the 100. And there's a 50. Okay, so we're over the 50. So the 200 and 100 both are saying, hey, we're at a spot that matters. So, having said that, I think there are enough reasons on this chart to suspect that perhaps Forex isn't quite so random. As you can see, 100 and 200 are both saying, uh, negative bearish pressure. Now, that doesn't make that doesn't say that this market will go down, and certainly there's no guarantees about anything really. But as you can see, it's not really so random when you take a look at the bigger picture. Unfortunately, most traders don't, and don't spend this kind of time looking at a chart, in the first place. But the beauty of the way I have this set up is now I can keep this chart drawn out like this for the next 2 weeks or whatever, or really forever, and about the worst thing I might have to do is, at least with the way I trade, is I might have to put in 1.4750, down the road if we do fall, and then maybe 1.45, et cetera, et cetera. But you can see it's nice and segmented, and that's the way I like to see my Forex charts. And then the fact that we have the confluence of the moving averages, and I'm not a big moving average trader, I really don't think much of them, but I know enough people out there do that it's worth paying attention to. And the Fibonacci there, I mean, and the candlestick, there's plenty of reasons to think that this market is not random, and if we break down lower, it really shouldn't be a surprise. Okay, guys, if you enjoyed the video, there are plenty of free ones on the website in the educational forum at thetraderguy.com, and you can always shoot me an email at chris@thetraderguy.com. Thanks a lot.